The Dow did a J-hook pattern over the last couple of days. Notice how it bounced off the 20-day moving average, but it did so with indecisive trading. Notice the tails or the shadows to the downside and the doji type days. When they brought it up positive yesterday, that pretty much told us we were back in an uptrend, which was also obvious that when we were in an uptrend and they can't close it back below the bottom of the downtrend or the bottom part of the trend, and they're closing it back up above the T line, that pretty much gives us an indication, especially with stochastics curling up, that the uptrend is in progress and our next target is likely the top of this trend channel. That is also confirmed by the NASDAQ, also doing a J-hook pattern using the T-line as support. It backed off today, but then again closed up near the high end of the trading range, indicating that it was just consolidating today, doing profit taking, which has been occurring in this strong uptrend. Very simple. The uptrend remains in progress as long as the indexes trade above the T-line. A steady uptrend allows these type of patterns, the fry pan bottom, to break out. And when you know that there's a breakout occurring, you can be buying calls right at the exact time that a breakout is occurring. We were buying the June 40 and 41s right in here for around 47 cents, closing them out for about $3.30 up here. Why were we closing them out? Because of the simple aspects of candlestick analysis. The further away you move from the T-line, the higher the probability you're going to see it come back and test the T-line. When do most people buy? They buy exuberantly at the top. So when you see a gap up in the overbought condition away from the T-line, you start watching for sell signals. When we put out our suggestions for buying and selling, it's based upon those patterns. We recommended looking at MDSO, a fry pan bottom that broke through the 50. There's a gap to be filled up here at the 200. It also has a potential for a doji sandwich, which is a very strong bullish indicator that if they open up positive, the simple rule of a doji is they're going to trade positive. And if they do trade positive, usually it's with the same magnitude as that day right there, telling us that we're still furthering this fry pan bottom breakout, still making this target a viable target. Whether you're trading stocks or commodities, investor sentiment acts the same way in all trading entities. As we can see in lean hogs, there's an uptrend. And where did we see the doji followed by your best friend signal, a gap up? Right here at the bottom of the trend channel. The visual capabilities of candlestick analysis allows an investor to easily see graphically what's going on in investor sentiment. That'll be it. We'll see you in the chat rooms.